This is Aurora. I wanted to do a quick segment. We're really lucky today to have somebody who deals with the disasters after these large hurricanes, fires, etc., that deal with FEMA, some of the programs that are available to you for disaster relief, etc. So as you can imagine, with anything that deals with the government, this individual is helping us by sharing the knowledge, but cannot be shown. So you're going to have to look at my ugly mug for a little bit, but we're going to ask some questions and she's going to share some of this information. So we have 11 minutes on this, so we're going to try to keep it as best as we can in the 11 minutes. So if you can try to explain the best what you do. I know that right before I turned on the camera, you had stated that the thing that you notice the most is that people think that they have the coverage, but what you've seen over the years is that people just don't have the coverage that they think they do.
That's correct. They don't think about it until a disaster happens. And I know that California is different as far as most policies here, to my knowledge, this may have changed, are covered for wind and such, a windstorm. But there are a lot of different types of coverage that these people need. For instance, they're not in a flood zone, so they never thought to get flood insurance. But it was, a situation where they had rising water, or they never thought to get windstorm, but the damage was caused by that. So there's just a lot of different perils that need to be examined and considered when getting the policies.
So for the division of FEMA, there's actually disaster relief programs that are available for these people if they did not have that coverage that they didn't realize that they needed?
Yes, they have something called a presidential declaration where the actual president of the United States will visit the disaster areas and declare it, and then FEMA will go in and try and assist. And then there is an agency declaration, which is the actual SBA, Small Business Administration, and they will go and declare a disaster independently of the president. And each will, if it's an independent declaration, FEMA is not involved. So there's a lot of smaller disasters that don't qualify for FEMA assistance. FEMA assistance, again, is really selective with regard to who gets help. You have to really prove your ownership. Another big deal breaker for a lot of people is they may have inherited a house and they did not get title transferred to their name, and they just kind of went with it all that time, and that is a big hurdle for us, because these are loans that we do. Where FEMA stops, we begin. FEMA is grant money and the SBA is loans, and they cannot lend, and this is all dependent on the state and the laws and the title and that kind of thing. They cannot lend on something they can't take for collateral if it meets a level of collateral, and they would need to. And again, that's always changing and variable.
So the fact that they technically, though they inherited it and they never completed that process, put it in their name, removes the right for collateral.
That's correct. It has to be in their name before the disaster in most cases. Now, we ran into so many problems in the South recently and in the past that sometimes they can provide for dispensation, but when you're dealing with people in a disaster, they can't always provide paperwork, wills and trusts and legal paper. Sometimes it's all destroyed and they can't just get it, especially in a timely manner. But a lot of reasons why they do keep it in not in their name is because they may be getting a tax exemption. Maybe their father was disabled, or their parent or grandparent was disabled and got some of these states, they pay zero property tax because of that exemption. So there's a lot of reasons why they would not want to transfer it in their name, but then it's a double-edged sword because then they can't get help.
So if we look at the Paradise fires that just occurred, and those individuals that didn't have enough coverage after the fire, or were part of the Merced insolvency and just didn't have an insurance company that was able to pay out, when they come to you for assistance, how does that work? How do they reach, or what benefits are available to them?
That's a great question. Basically, they sign paperwork, which is that original application, and that application says that we have the right to investigate any of their insurance claim. The sooner they can get us the policy numbers, the claim numbers, and we can see that they were not assisted by their insurance company when they did not get indemnity, the sooner we can assist them with grants or lending alternatives. But we're not here to make people better off. We're here to create a situation where they are exactly where they were before the disaster. So we do subtract the amounts that they were paid out. But a lot of people had too high of deductibles, or it just varies. It just varies as to why they didn't get paid out.
So in the case of Merced Property and Casualty, they went insolvent, and right now California Insurance Guarantee Association is matching or guaranteeing dwelling limits up to $500,000 and personal property limits up to $500,000. But some of these homes had replacement costs up to $1 million. So in essence, what I'm hearing you say is that under this FEMA Protection Act, or these guidelines, these things, they could actually come in and say, I only got $500,000. This gap under this insolvency is $500,000. Then there's a possibility there could be some grant money for that difference.
You bring up a very important point, and the maximum government loan is $240,000. $200,000 for a dwelling and $40,000 for personal property. So this facility here in Citrus Heights did not handle the fires up north, but we did handle the Napa and some of the other fires, and these people got sometimes $2 million for their house and $1 million for personal property. So that takes away their eligibility for $240,000. It's more, unless they had an evaluation. Let's say they had an evaluation of $1,040,000, and they got $1 million. So I could still get them the 40.
The 40,000.
The difference. But on almost all the California properties, they got way more than we could ever assist with. When you do the math, it just really, and I actually saw very, very good stories. Some of these people wouldn't even call back because they're like, hey, I got my $5 million replacement cost. We only paid a couple of million during the downturn, so we're happy, and we're not even gonna call you back.
So and you don't have to answer this question, but did you see any trends with any insurance companies that people were habitually underinsured by?
All the time. They're always either underinsured. The South, where most of these disasters happen, they're very, they have a different culture. Your Florida, Georgia, Alabama, all these states, Texas, they're very laid back in the South, and they just don't think about it. Even when you call and you say, hey, I need this information to proceed, it might be days or weeks till they get that information to us. So I'm assuming they're the same way with their necessities, where they just think, oh, I have time to think about it, or I have time to work on it, and then something happens and it's like, well, no, you really didn't have that time to waste. And it's always the same. You've got people who are always on it, and then you have people who are never on it, because some of these places have been hit with prior disasters, and it's always almost the same story, each time.
So if you had a piece of advice for people that are out there that are facing these really large price increases versus covering themselves properly, would you tell them to skimp on coverage or bite the bullet and pay the price?
I think, honestly, pay the price, because first of all, home ownership, I'm a real advocate for that, especially in this region. We are one of the best deals in the entire country. This entire 5-county, Sacramento, El Dorado. Of course, you have your high-priced executive homes, but you can buy a $300,000 home, which is kind of at an average two-bath, 3-bedroom home, for less than what it would cost you to pay rent. And you have to also think of other costs, such as, and I'm not a real estate broker or anything, but I just know that you're always better off buying. You get your tax deduction, so why not take care of that? Why not take care of your investment? Because these are changing times, and disasters will happen. So and look for, maybe if you bundle your insurance and your auto insurance, your car, your home, and anything else, umbrella policy, you can probably.
So the other thing is, how do people go about, how do they start the process once the time comes to even learn about and to get this type of funding that's available to them?
Well, the application that they fill out is a FEMA assistance application. And not a lot of people realize that is a loan application. A lot of people have the misconception that FEMA is just handing out money. They don't read the fine print that, hey, this is a loan, and this loan would need to be paid back. And it is a government-backed loan. So if you don't pay it back, there could be some consequences. And there are many. It's just like a student loan, or some of the other government issues, like taxes being paid and that kind of thing. So a lot of people don't realize they are directed to fill out this FEMA application, and so their guard is down, thinking, oh, this is going to be free grant money. And the way it works is, you just hit on another very important point. The government sees it as, if you can afford to pay back a loan, if you have the credit and the collateral and repayment ability, then we're going to lend you money and not really get you as much FEMA. But it always varies on who gets the FEMA. It just depends. So you may get some FEMA just to get you started or living again in the dwelling, but it's not enough to complete the repairs and such. So that's a very important point. A lot of people don't realize FEMA is only a stepping stone to the loan. That application has the FEMA registration number and all that is to provide you with assistance. And the FEMA money is never, that I have seen, going to be enough, because sometimes we have so many individuals applying for assistance that they can't just give it to everybody. So the thing is to know that FEMA's not going to come in and save you. It's going to be a loan, so you're better off being insured in the first place, because it's a lot of hurdles. It can be.
So I want to reiterate what she just said there, because I think this is very important for people to remember when they say, oh, well, I'll just take this amount of coverage, or I don't want this amount of coverage. Is FEMA is not going to save you. So when my brain hears all this, I I want to make sure that I clarify for myself and for everybody who's listening. My assumption would be that these types of assistance programs and gaps are only for people who are going to decide to rebuild where they're at, not to just take the money and the difference in their insurance policies and go live someplace else. Am I correct in that?
Actually, the SBA offers a relocation program because in some cases, an area may be determined unlivable, right. A good example would be Hurricane Katrina. They had a tremendous oil spill in the region and it was deemed uninhabitable. So they do offer relocation assistance with the same bucket of money to accomplish that. But it's very hard to do. And we also offer mitigation, meaning monies allowed for preventing any future damage. For instance, elevation, storm windows, things like that. But again, it is the government, and so it is really hard to get through the hoops. I do want to say that some of the banks actually have disaster loans as well, that are much more streamlined. And so you should always ask your lender if they have that, because another thing is a lot of people feel that the SBA loan is just super cheap interest, and not everybody gets that super cheap interest. If you have good assets and a really good, it's just like any social program. They're going to give to the people who need it the most, and the people who don't need it the most are going to get the regular rate. So that's another thing to consider. You might want to check with your bank. That's something new that I've seen, disaster loans through a bank. I hadn't seen that in the past, but I guess there was a need for it, and so it is available, but it's not going to be, in some cases, the super cheap interest. But we don't know if you get that super cheap interest rate if you apply it anyway.
So I know that you've seen throughout the counties, I know you've been following some of the pages that I run, and you're responding to a lot of the community members and sort of the outrage and sort of the awakening that is happening across these counties, that now that these insurance companies have pulled out, now that our government has, our local assemblymen and everybody has basically stated, we're so sorry for you. What is your piece of advice for people? If you had one thing that you would like to scream out in these forums, to people, is what is your advice for them to help them strike change now?
Well, I think we're on the right track, because you have given some excellent information on these pages, and I noticed a lot of hostility toward you, which I think is unfair, because people just want to hear what they want to hear. They don't want to always hear the truth. But the thing is, we're not alone. If you take a look at some of the news, you can see that the Palm Springs area is a very high-end area. There's La Quinta and all these other communities, and they're all underwater. A lot of there's just, it's not just the fire hazards, it's the flooding, it's the, there's other disasters taking places in different areas. And so I feel, hey, I don't agree with insurance companies pulling out, because they, how do I want to say this? There's always going to be disasters everywhere, whether you see them coming or not. And we are dealing with climate change and stuff like that. So I think prevention is a really good thing. I think maybe a lot of people, aren't looking at the prevention aspect of some of these things. You will see on occasion somebody in these disasters doing their own sandbags. Again, it's always the same people who are super responsible. taking matters into their own hands to protect themselves and their families, and then you'll see people who just don't have time for it because they never thought. So I think the most important thing is using the resources like yourself, and taking that information and instead of getting angry about it, really just try and see where you can work that in. And again, the information was awesome to see it coming from somebody in the industry and not just a bunch of rumors, because we don't know why these people were being dropped. Did they have another big claim that was it's apples and oranges a lot of times. Maybe they got dropped because they had some claim that maybe shouldn't have happened. That happens a lot as well. You will have people who might have been dropped because of some other reason. I would rather use a resource like yourself than calling the insurance company, because a lot of people have told me when they make that call to their own insurance company and say, are we covered for this and that, all of a sudden they'll either get dropped or their rates go up just on that phone call. They will screen that call, they'll record it, and they will start to wonder if you're a higher risk than they assess. So it's better to use somebody in the industry like yourself to really answer those questions, because hey, they're a business like anything else, and they're going to want to make their profit the most important thing.
So I thought I had that was my last question, but another thing popped up. As we're moving forward and the new law has come out to allow private flood insurance, as well as the FEMA. As you know, FEMA flood insurance can be, sometimes $5,000 a year or greater. And now these private flood insurance under this new law are able to come in, cannot be rejected by the mortgage companies. And in the same case, in some of these high areas, can be $700 a year, where FEMA's $5,000 a year. Do you think that there's a life in this private flood insurance? Do you think that FEMA is going to sustain in flood over the years with as many disruptions and as many holds as they've seen?
You brought up another good point. Here I'm in the business, and I had no idea that was happening. From what I understood, all flood insurance was underwritten by FEMA. It's actually an acronym we use around the office, and it's all. You may buy it from a different companies, but it's all underwritten by the same. So you're saying now that they're allowing for different underwriting.
Correct. So private companies can offer in these high risk areas, and they write it by risk themselves. So if FEMA states that this is an AE flood zone and it's a high risk flood zone that they determine should be, rated at $5,000 a year, the same, we may have 7 different private flood insurance companies that say, we rate this risk anywhere from $1,700 a year down to, in some cases, $400 a year, depending on what they determine line of sight and access, how many times a certain area has flooded, etc. So what we are hoping as brokers is that it relieves some of the pressure on FEMA for standard flood insurance policies, so that where FEMA is needed is simply for those areas that nobody wants to touch, where we can move it back to FEMA focuses on the necessary, where private flood is able to do that free market type of area and provide a bunch of different options.
I think that's awesome. That I think competition is always good in that respect, and FEMA doesn't always have it right, I hate to say. There are people who were deemed in a flood zone A, and then there was a little corner of a map, or they were on an elevated hill or something, and they were not part of, they were just kind of thrown into the bucket. So I think it's excellent that they offer that. I didn't know that, and I think a lot of people don't, otherwise they would have run with it and gotten it.
Well, the problem was FHA loans would not allow for private.
Oh,
the law just passed and just got upheld that the FHA, any of the federally backed loans, will now have to accept private flood options.
That's great. Yeah. That's great. And I didn't realize it was so expensive, but that's probably why people have been telling me I didn't get it because I couldn't afford it. But I'm really surprised also that people, oh, here's a very important point. If you don't get it or you drop it or something like that, you'll have what's known as forced placed, and that only pays off your mortgage. That does not pay off, that does not allow you funds to rebuild. So it's important people know that, because there's a lot of misconception. Oh yeah, I'm covered. They
forced place coverage on me. We hear that all the time as well.
Right.
So the forced place, I try to explain to them, only covers the interest of the mortgage, never covers the interest of the party being forced on.
Right, right. And if it's below a certain amount, I don't think they even add it. If it's under, if your mortgage is paid down pretty low, so it might behoove you to, seek out a private policy. That's awesome to know, because it's just terrible hearing these people they really think, the government is going to come in to save the day. And, we try our best, people working, as I mentioned, 6-10-hour days, some people working 7 days in a row. One of the last disasters last year, they actually brought in, they couldn't find enough people to do this kind of work, so they brought in individuals from other government offices, from HUD, any government employee, to come work these disasters. And because it's a good job market, so everybody's working, so it's really hard to find people with the same skill set. And they still had a hard time making a dent. They really had a hard time, And so, again, the most important key here is education. And sometimes there's things you can do to lower your risk, as I said, like elevation, storm windows, cutting trees, a lot of these things that will, what is it? They call that
defensible space.
Defensible space, yes. So those things, I know it's hard, because if you're getting in your senior years, and hey, especially in the mountain areas, sometimes it's hard to get anybody to show up and do it, even for money.
Well, we do have a lot of wonderful programs in El Dorado County and that are expanding. We do have the senior tree removal program that does allow for that. We have the veteran tree removal program. We've got the cheap chipping program that is available. So again, all employment-based, not employment, but income-based options that are available. There are, steps. You can only do it so many times per quarter, but we do have, just like your SBA, we do have lots of different programs that are available. We're continuing to expand those across. So there are options. I think the biggest part is, I think there's a lot of options that are not discussed, that are not just shared. And I think that's where we need to do better as a community. And that's why I thank you so very much for taking the time, being here. And without people like you, it's just, we're never going to make any traction. So I just very, very appreciative of you taking the time today to come out.
I appreciate all your information that you're putting online, and all the FEMA information is online as well. But the important thing to know is that, there's always exclusions to, who gets help. If you didn't file your taxes one year because you just didn't get around to it, even if you didn't know, that
can stop you.
Stop your application there. Or if you didn't pay back your student loans, or were delinquent, there's a lot of deal breakers in government lending. Child support delinquency, there's things you never heard of that they would never ask you at a bank. So it's important to know that, your best bet here is to be insured.
Be insured. Yeah. See, I like that message. Just be insured, and be insured properly. So, all right. Well, thank you. We're going to wrap it up. I hope this helps some people, gives some people some more options, just let you know some of the disaster relief programs that are out there, should you face, not having enough coverage. And as always, if you guys need anything, if you have any questions on anything that we discussed, feel free to reach out to us at www.iiprotect.com, 916-585-8184, and we will talk to all of you guys soon.